Tesla's stock tanks despite record deliveries. Tesla's Q2 delivery numbers are in, and they're impressive, 480,126 EVs shipped. But the stock is sinking, down over 10% in one day. What's driving this discrepancy, and what does it mean for investors? Let's dive into the numbers. Tesla shipped 480,126 EVs in Q2, exceeding expectations. This is a 97% increase from Q2 2022, with the Model 3 and Model Y leading the charge. But despite this success, Tesla's stock has dropped over 10% in one day. This is the largest single-day drop in over a year, with Tesla's market cap shrinking by $40 billion. And it's not just Tesla. Other EV stocks like Rivian and Lucid are also down. So what's behind this drop? Is it a sign of broader market concerns? Or is there something specific to Tesla at play? We'll explore this further. But first, let's look at the numbers in more detail. Tesla's delivery numbers have been consistently strong, with an average quarterly growth rate of 15% over the past year. And with the recent launch of the Cybertruck, Tesla is poised for continued growth. But the stock market is not always rational, and sometimes it takes a contrarian view to make sense of it all. For example, in 2020, Tesla's stock dropped 20% in one day despite strong earnings. It then proceeded to climb over 700% in the next 12 months. So, is this a similar situation? That's what we'll explore next. Additionally, back in 2019, the company's stock price was heavily influenced by the trade tensions between the US and China, which led to a significant decline in the stock price. However, Tesla was able to recover and thrive despite these challenges, which is a testament to the company's resilience and adaptability. Furthermore, a closer look at the company's financials reveals that Tesla's revenue has been growing at a rate of 30% year-over-year, with a significant increase in gross margins. For instance, in Q2 2022, Tesla's revenue was $14.6 billion, with a gross margin of 25%, which is a significant improvement from the previous year. So, what's driving this disconnect between Tesla's delivery numbers and its stock performance? One key factor is investor sentiment. With the recent launch of the Cybertruck, some investors may be worried about production costs and profitability. Others may be concerned about increased competition in the EV market. And then there's the broader market environment. With interest rates rising and recession fears growing, investors may be getting more risk-averse. But it's also possible that the market is simply overreacting. After all, Tesla's delivery numbers are still incredibly strong, and the company is poised for continued growth. For example, in Q2 2022, Tesla generated $14.6 billion in revenue, with a gross margin of 25%. This is a significant increase from Q2 2021, when revenue was $11.9 billion and gross margin was 22%. So what's the right approach for investors? Should they be buying the dip, or is this a sign of more trouble to come? We'll explore this further. But first, let's take a look at what this means for your portfolio. Additionally, a historical comparison reveals that during the 2008 financial crisis, many investors were caught off guard by the sudden downturn in the market. However, those who were able to adapt and adjust their strategies were able to navigate the crisis and come out stronger on the other side. Similarly, investors who can properly assess the current market environment and make informed decisions will be better equipped to handle any potential downturns. Furthermore, it's essential to consider the potential impact of external factors, such as government policies and regulatory changes, on the company's stock performance. For instance, the recent changes in tax policies have had a significant impact on the company's bottom line, and investors should be aware of these developments when making their investment decisions. But the part that surprised me most is what this does to your 401k, potentially erasing years of gains in a matter of days. Imagine if you had invested $10,000 in Tesla stock just a few months ago, only to see it drop by 20% overnight. That's a loss of $2,000, a significant hit to your retirement savings. This is what we'll be discussing next, and how you can protect yourself from such losses. For example, a well-diversified portfolio can help mitigate potential losses, and we'll explore some strategies for achieving this in the next section. So what does Tesla's stock drop mean for your 401k or investment portfolio? The answer is complex, and it depends on your individual circumstances. But one key point to consider is the broader market implications. If Tesla stock is dropping despite strong delivery numbers, what does that say about the overall market environment? Is this a sign of a larger correction, or is it just a sector-specific issue? For example, in 2020, the S&P 500 dropped over 30% in a matter of weeks, only to recover and reach new highs. So what's the right approach for investors? Should they be diversifying their portfolios, or is this a sign to go all in on Tesla? We'll explore this further. But first, let's look at some historical context. Tesla's stock has been volatile in the past, with several significant drops and recoveries. For instance, in 2019, Tesla's stock dropped over 40% in a matter of months, only to recover and reach new highs. So, is this a similar situation? That's what we'll explore next. Additionally, back in 2008, during the financial crisis, the stock market experienced a significant downturn, but investors who stayed the course and continued to invest were ultimately rewarded with substantial gains. This historical context can provide valuable insights for investors navigating the current market environment. But what if I told you there's a contrarian view that could change everything? One that could help you turn this stock drop into a buying opportunity. For example, during the 2020 pandemic, investors who bought into companies like Amazon and Netflix were rewarded with significant gains, as these companies experienced a surge in demand for their services. Similarly, investors who take a contrarian view on Tesla's stock drop may be able to capitalize on the company's long-term growth potential. That's what we'll be discussing next, and how you can use this strategy to your advantage. Specifically, we'll explore how to identify undervalued stocks and how to time your investments to maximize returns. So, what's the contrarian view on Tesla's stock drop? One possible interpretation is that this is a sign of a larger market rotation. With interest rates rising and recession fears growing, investors may be shifting out of growth stocks and into more defensive sectors. But this could also create a buying opportunity for investors who are willing to take a longer-term view. For example, in 2020, investors who bought Tesla's stock during the pandemic dip were rewarded with significant gains. So what's the right approach for investors? Should they be buying the dip, or is this a sign of more trouble to come? The answer depends on your individual circumstances and investment goals. But one key point to consider is the importance of diversification. By spreading your investments across different asset classes and sectors, you can reduce your risk and increase your potential for long-term returns. For instance, a portfolio with a mix of stocks, bonds, and real estate can provide a more stable foundation for your investments. Additionally, investors should also consider the potential for a market rebound, as we saw in 2020, and be prepared to take advantage of any potential buying opportunities that may arise. Furthermore, it's essential to have a well-thought-out investment strategy and to stick to it, even in the face of market volatility. A solid investment plan can help you stay focused on your long-term goals and avoid making emotional decisions based on short-term market fluctuations. In conclusion, Tesla's stock drop despite strong delivery numbers raises important questions about market expectations and investor sentiment. The key takeaway is to stay informed, stay disciplined, and always consider the broader market environment. To apply this to your own investments, consider the following actionable steps. Review your portfolio to ensure it is diversified and aligned with your long-term goals. Set a budget and stick to it. And avoid making emotional decisions based on short-term market fluctuations. Additionally, take a closer look at your investment strategy and make any necessary adjustments to ensure you're well-positioned for long-term success. This is for education, not financial advice. Talk to a fiduciary for your situation. If this changed how you think about Tesla's stock, hit subscribe. I break down one of these every week. And as a final thought, remember that investing is a marathon, not a sprint. By staying focused on your long-term goals and avoiding common pitfalls, you can increase your chances of success and achieve your investment objectives.